Right, shifting the focus now to China as Beijing issues its first COVID retaliation after a number of nations implemented restrictions on its travellers. This, of course, following the dismantling of China's COVID zero policy. We're here to break it all down as Yahoo Finance's Ines Ferré. Ines, what are you watching at the moment?
Yeah, Rochelle, well, we are watching Chinese ADRs. As you just mentioned, China putting some restrictions on the visas, short-term visas from Japan and also South Korea. This is in retaliation to Chinese travelers and the curbing that some countries have done with perhaps reducing some flights and also requiring COVID-19 tests from Chinese travelers. So a bit of a retaliation there. But just looking at the Chinese ADRs today, we are seeing a bit of a mixed picture. You've got Alibaba, that's up more than 3%. NetEase is also higher. I do want to point out that over the last couple of months, we have really seen these Chinese stocks soar. I'm pulling up a 2-month chart here. You can see that Baba is up 64%. So much of this is on the expectation of that full reopening of China. Easing of regulations also when it comes to these Chinese big tech firms and authorities in China putting economic growth above all else. Also, there's been talk about Chinese regulators helping to shore up the balance sheet of Chinese developers as there is a property downturn happening in China. So you have seen these Chinese ADRs really pop. And in fact, because of the reopening as well, this has prompted some bullish calls. So I've been watching the Morgan Stanley put out a note about Chinese assets, expecting Chinese stocks to outperform other global stocks, and also expecting the Chinese economy this year to increase by 5.7, grow by 5.7%. And that's versus a consensus of an increase of 4.8%. So Morgan Stanley, very bullish on China. Goldman Sachs also recently had a bullish note on China and the reopening of China. Rochelle?
Certainly be keeping along on that long and probably truncated reopening for China. Thanks for that update, Ines Ferré, there for us.